Hi everyone and welcome to today's morning report on Tuesday the 19th of May with me, Richard Perry, market analyst at Handtech Markets. The European trading session has got off to a very strong start actually, and that's come on the back of ECB member Benoît Cœurè's comments that QE could well be front-loaded this summer, and also the fact that theoretically deposit rates could even move even more negatively. Huge reaction on the markets on the back of that, on this jawboning of the euro lower. Euro strongly lower, and also you look at the likes of the bond markets. Let me just show you the German Bund, which is also sharply lower. So that would suggest buying on bonds, and also equity markets strongly higher on the back of that. The DAX is up considerably today. So very strong reaction to these comments from Benoît Cœurè today, and having an impact across the markets really. The euro is well over 1% lower as we speak. So significant move there. Yesterday we had FOMC member Charles Evans giving comments that he was basically saying that the Fed rate hike for June wasn't necessarily out of the question, but he was plumping more for a 2016 rate hike. So markets took that as a positive, and pushed on higher. The S&P 500 pushed into all-time high territory intraday and also on a daily close basis, and Asian markets pushed higher as well on the back of that, and that has just helped also this European rally that we've had this morning. So what we have got is this rebound in the dollar index, sharply higher again today. So is is this now turning around this dollar index? Well, near term it certainly has had a big impact. Whether it is the big turning point in the dollar correction remains to be seen, but certainly the euro is under pressure at the moment and needs to find support, and I'll talk about that in the chart and appraisal in a little bit. In terms of what we've got to look out for today, a significant amount of data actually, lots to go through today. Starting off with the UK CPI 9:30. And the expectation is for 0% there again, and there is a slight risk of a dip into negative inflation or deflation. The Bank of England is expecting this at some stage this year, and the chances are that it's going to happen possibly this month, and that would due to the early impact of Easter last year apparently, so that could well be seen this month, but it's only meant to be a temporary feature. And then at 10 o'clock we've got the the Eurozone CPI data, which is expected to confirm the flash data of 0% again, flat on that inflation data, so improvement in the inflation in the last few months, and certainly that seems to coincide with the onset of QE, interestingly enough, as well. You've then also got at 10 o'clock the German ZEW, which actually is forecast to come off the top, actually, 49.0, so that would be a 4-month low then on the ZEW, so that wouldn't necessarily be a great indication for Germany if this ZEW starts to roll over, because there are definite correlations between the ZEW and also the German growth. So into the afternoon we've got the US data, we've got the housing starts and the building permits. Building permits are forecast to go slightly higher to 106 million, so it's continuing to remain strong there, and the housing starts are forecast to sort of recover from a couple of months of weakness actually, back to 1.02 million, so that would be an improvement again there. So lots going on this afternoon and this morning. In terms of my chart of the day, now this is an interesting one because we had the minutes from the RBA overnight, the Reserve Bank of Australia, and it seemed to suggest that the RBA was sort of not ruling out further rate cuts, which was interesting, and also the RBA suggested that the Aussie was still quite expensive and overvalued. So interesting that that came, and it didn't really have too much of a negative impact. But what I've done here is I've got the cross between the Aussie and the Kiwi. I thought that would be an interesting one because the Kiwi has been another currency where the central bank has been trying to jawbone the Kiwi lower, and it sort of has had this impact on the Aussie Kiwi cross of a big rally, where the Aussie has been relatively stronger than the Kiwi. But is this now coming to an end? You've got a series of candlesticks here, which I would say are quite sort of coming quite negative now. Certainly not anywhere near as positive as the candles we have been having. And we've already had an outside day today, and if it closes below yesterday's low, that would be a bearish outside day. So if it closes below 759, it's not far from there now. That would be a corrective move there. The RSI is just rolling over a little bit, and MACD lines and stochastics not too bad. I would say that watch out for the RSI coming back below 60. That could be an interesting telltale sign of a correction coming up. But there could be, if it did close below the low of 2 days ago, which was 726. That would actually complete you a little top pattern. That top pattern gives you on a minimum of around about 120 pips to the downside, maximum about 150 is the implied target. So anywhere between sort of 570 to 106 area would seem to be the case. And there's that top pattern potentially in there on the hourly chart. Interesting that also you had this uptrend in place that seems to be now being tested, and the move today is certainly breaking that uptrend, I would say, and it's now beginning to find resistance around that uptrend as well. So is that interesting in terms of this turning into a bit of a top pattern potentially? I wouldn't start calling this top pattern quite yet because I haven't seen that break below 727, but still the pressure seems to be mounting a little bit more, and that was the reaction in the Aussie Kiwi from the RBA minutes. So it certainly seems to be that the reaction is to the downside, and the pressure could well be growing, and that could well start to signal a bit of a reversal of this recent trend. So it could well be that this run higher in the Aussie versus the Kiwi is running out of steam. So a lot of interesting signals here. So the key resistance comes in at 108.50, and that comes in, sorry, just flip that back, below that 108.80, which was a big bearish key 1 hour reversal, or bearish engulfing pattern, whatever you want to call it, on the hourly chart. So that certainly signalled the high, and we've not been above that since, and it certainly looks as though at the minimum it looks like it's a consolidation, but it could well turn into a top pattern considering this uptrend has now been broken, and we're getting a few negative candles coming through on the daily chart as well. So lots of interesting signals on the Aussie Kiwi. So I wish you good luck in your trading today, and I will speak to you later. Thank you.